Lovely. My name is Niklas Kunkel. I'm the founder of Chronicle. If you're not familiar with Chronicle, we are one of the oldest and largest oracles in all of DeFi. You may have been familiar with our previous name, MakerDAO. Kind of the origin story, I guess, is when we were building DAI in 2017. One, there was no DeFi, but more importantly, there were no oracles. And so the founder of Maker Runa came up to myself and a gentleman, an Argentinian fellow actually, Mariano, and was like, you guys go make an oracle. And so we spent like 2 weeks on this. We're like, okay, cool. Don't ever have to think about that again, right? Now we can go back to building what we actually want to build, which is this, crazy thing called a stablecoin, right? Life has a funny way of working out. And so here I am, 8 years later, still working on this oracle problem that I thought was done and dusted all that time ago. What I want to talk about today in particular is tokenized assets, what they mean for us as an ecosystem, what is the state of them today, and what do we need, right? What do we need to push this forward and to scale all of this? So I think you would be forgiven if you thought, right, we were in a bear market, right? You look at token prices and everything is crashing, right? You probably hear a bunch of companies are doing layoffs, right? And I kind of get from, talking to people and from reading on crypto Twitter, right, that the sentiment is rather negative, right? And it's very disconnected from what I'm seeing on the institutional side. Institutions are fairly immune to price action. They're operating on, at least a 2 or 3 year time horizon, if not more. And they're full steam ahead on tokenizing existing financial assets. So depending on who your trusted source is, right, you have entities like McKinsey, Boston Consulting Group, Citi, Standard Chartered, right? And all of them have given various, quotes for how big they think the tokenized asset space is going to be between 2028 and 2030, right? And as you see up here, right, there is some range, right, between $2 trillion to $16 trillion. To give you an idea, right, DeFi less stablecoins is only at around under 100 million. Just to give you an idea of the scale here. Right. And this really I think hits the nail on the head of what is the problem here. Right. And if you look at DeFi growth over the past few years, it's been stagnant. Right. And it's been stagnant. Why? Well, it's because the Bitcoin price hasn't gone up, the ETH price hasn't gone up, and the Solana price hasn't gone up. Right. And when I say hasn't gone up, okay, maybe, Bitcoin doubles or something. But that's not very interesting from a DeFi point of view. If the size of DeFi doubles, this is pretty pathetic growth. We need to figure out the way that you 10x and 100x the size of DeFi, right, to be able to bring the utility that we know this platform can deliver. And so what's so exciting about tokenized assets is that tokenized assets are that high quality collateral, right, that is the unlock for DeFi, that can scale DeFi to that, multi-trillion type of scale. But there's a problem. And if you just think about it intuitively, a tokenized asset is not the asset itself, right? It is a tokenized wrapper around the underlying asset with varying degrees of ownership, right, from a legal sense. And so from a DeFi perspective, this becomes incredibly risky to integrate because these tokenized assets are not crypto native. Even if the DeFi protocol holds the, tokenized assets like on it from a protocol perspective, what is happening in meat space? What is happening off chain? Right. And this has the power, right, to disrupt this very elegant, ledger and accounting system that we've built up in DeFi. The second problem is that, and this is a function of crypto assets not being crypto native, or tokenized assets not being crypto native, is that they're not transparent, right? They lack transparency. You don't have any of the metadata that contextualizes this tokenized asset. And even if you do have access to data, you don't have any strong guarantees that this data is actually correct, that you can rely on this data to power, multi-billion-dollar DeFi protocols. And so in order to solve all of this, Chronicle earlier this year in January launched Proof of Asset. And so Proof of Asset is our answer to the what we call the tokenized asset bridging problem. Is how do we connect TradFi to DeFi? Because if you can solve that, right, then we're off to the races, right? DeFi wins, stablecoins win, we all win. So there are kind of three core principles here to this product, right, that are going to get us there. One, data has to be sourced directly from the origin, right? So this means you cannot just trust a, tokenized asset issuer, or, to give a more recent example, a stablecoin issuer, right? We had the DPEG of the streamer stablecoin a couple of weeks ago, right? They reported their own proof of reserve, right? They're like, here's our proof of reserve, right? You can see what's backing the streamer stablecoin. Well, it's completely meaningless if the issuer of the stablecoin is the one that is telling you what is backing the stablecoin, right? There is a complete moral hazard relationship there, right? So, one, yes, we should be demanding these proof of asset, proof of reserve attestations for the stablecoins and for the tokenized asset products that we use. But we need to demand that the data is being sourced from the origin, right? So not the tokenized asset issuer, not even the fund administrator, right? Ideally, you want to be at the custodian level. So you can have the proof of reserve oracle look into the custodian account, tell you exactly what is there, to the second, right? What is in there, and report that in real time on chain, right? So all of the risk management automated systems in DeFi, right, can be powered by this data stream. So I wanted to give you an example of proof of asset in action and how many of you have probably used this product without even thinking about it. So I want to talk about a partner, M0. If you're not familiar with M0, they are a stablecoin as a service platform. Anyone can go and launch their own stablecoin through M0. Right, and so you may be familiar with USD AI or with Daylight or with MetaMask USD. I think there was just an announcement from MoonPay that MoonPay is going to launch their own stablecoin through M0. So all of these stablecoins, right, are issued through the M0 protocol, and proof of asset is directly embedded in the minting of these assets. So when someone wants to mint some stablecoins through M0, they will have reserves, reserves in, say, a bank, in a bank account, or reserves in some kind of escrow. And the minter will say, hey, Chronicle, I want to mint, 10 million stablecoins. And Chronicle proof of asset will then go and check the escrow or check the bank accounts to show that they have enough encumbered reserves to mint the amount of stablecoins that they want to mint. Now, is this inequality true? Is one larger than the other? If they are, Chronicle proof of asset returns like an attestation, returns a signature, and that signature is then used when they want to mint the stable coins in the M0 protocol. And so now there's just under $800 million of collateral in M0, right? Backing just under $800 million of M stablecoins, split across all of these different, white labeled stablecoin issuers. So let's take a little bit more of a peek of like some of the underlying data. So with Chronicle proof of asset, you're not just looking at the top line numbers of like what is the AUM, like what are the assets under management, what is the NAV, like what is the price per stable coin or price per share, right? You're really looking at the data from a first principles type of level where you can see the exact holdings, right? Like here we see here is a treasury bill. It's going to mature on this date, right? We have this many units of it. This is the market value of it. This is how much yield is being generated from that treasury bill, right? And all of the higher level data that you see is constructed using this lower, base level data, right? And anytime you are consuming the higher level data, right, we can provably show you, right, that this is the data that we got from the origin. We can prove that we haven't tampered with it. We can prove that the calculations we did on it are correct and haven't been manipulated. So when you're consuming this data on chain, you can cryptographically verify this, right? Don't trust, verify. Right here, you can see all of the mints that have been done through the M0 protocol over the last couple of days. Below, you even see the collateral updates for different minters, right? So there's one minter that has, $32 million in, collateral reserves. Chronicle proof of asset attested to that, and then you see that same minter up above, right, doing a $9.8 million, stablecoin mint. So I want to kind of put some numbers on this. Our adoption of this product has been crazy. I'm telling you, like I've been in DeFi for going on 8 years now, right? And throughout that time, we've built up a great suite of partners, and MakerDAO and Morpho and Spark and Euler and the like. We did that over many, many, many years. We launched this product for tokenized assets in January, and we are already working with the largest asset managers in the world, some of the largest custodians in the world, almost all of the major tokenization issuer platforms, and some of the best and largest risk curators and capital allocators in the space. So, just to back up what I was saying with hard numbers, right? 10 billion is our DeFi oracle, right? That is the business that we've been able to build up in 8 years. It took us 8 years to get to 10 billion of total value secured in DeFi. It took us 10 months to get 5.5 billion. And if that doesn't tell you at the rate at which tokenized assets are growing and at the institutional interest in this vertical, I don't know what to tell you. Like within 6 months, tokenized assets are going to be bigger than DeFi. Within another 12 months, they're probably going to be 5x DeFi at a minimum. And this is just going to continue and continue and continue as, the flywheel effect just keeps going and going and going. So with that, I just want to lead off. I think Chronicle is doing some of the most interesting work in the industry, and really, trying to get away from all of the scams and the hacks and the fraud and the DeFi Ruby Goldberg gymnastics of Ponzi-nomics, and really trying to be that serious, focused, institutional grade compliant infrastructure, right? One that we can really rebuild not just DeFi, but all of finance on top of. So I want to thank you for your time. If you want to get in touch with us, please reach out. You can follow us on Twitter at Chronicle Labs. that dashboard that all my sexy screenshots came from. You can view that yourself right now at chroniclelabs.org/dashboard and play around with it. Please do give us feedback. What would you like to see? How can we put more data on it that you think might be interesting? And if you're a DeFi protocol and you want to level up your risk management systems, come talk to us. I think we can help you quite a bit. Thank you.